These days, so many companies are going nuts in terms of construction. They're making commercial real estate. Nobody wants that, but they're taking out fat loans for that. You got people buying retail space and malls. Nobody wants that either. There is no business in that, but they're taking out huge loans for this. Huge apartment buildings in Oakland, for example, with 0 tenants. Yeah, they're taking big loans for those investments. It kind of makes like no sense. Because you have a lot of these buildings where are empty. They don't make money, but people are still taking out huge loans for these. So what's going on? Because these loans are pretty bad. So check out Barron's right now. You got Carson Block offering a side bet on his Blackstone mortgage short. So Blackstone Mortgage Trust is a massive corporation. They essentially have a lot of money loaned out. And it's mostly for commercial and office real estate, which is pretty doo-doo right now. If you check out some of the commercial real estate, even in very popular cities like Austin, typically gets a lot of new companies and startups coming in. But look at the amount of office space for sale. They're everywhere. And these are just like smaller buildings. Now the big fat skyscrapers are selling for 50% off over there in San Francisco. In fact, some places in California, if you don't sell office buildings for 50 to 70% off, you're kind of screwed. And let me just tell you guys how bad the commercial office space is, right? I'm pretty sure you guys have seen this skyscraper in LA. If you guys have ever been to downtown LA, it's a pretty dystopian place, but at the same time, you have these massive skyscrapers like the AON Center, which sells for a measly $147 million. Might seem like a lot of money, but it's $133 per square feet, which is a 50% discount from the 2014 price, which is almost a decade ago. So $133 per square feet is pretty bad compared to other downtowns like downtown Singapore, which are selling for about 2,000 to 3,000 USD. So yeah, that's like a 20x difference. So you get the idea, commercial real estate is pretty bad. And no wonder Carson Block is also going in hard and shorting the Blackstone Mortgage Trust. And it's not just them, but also if you head over towards New York's Wall Street, they also have Muddy Waters, which is one of the most infamous, most feared short sellers. They're taking aim at the Blackstone Mortgage Trust as well, warning it could be completely wiped out by rising losses, because it doesn't really take a genius to notice how bad commercial office space is. For example, San Francisco's commercial office space before the pandemic was $1 trillion market because you have all those big tech companies. But now a lot of these tech companies have left, and they're pretty much left with just disgusting commercial real estate that nobody wants. Vacancies are almost 40%, and they go up 2 to 3% every single quarter, which is every single 3 months. And as vacancies go to 40, 45, 50% in the next couple years, Blackstone Mortgage Trust, according to Muddy Waters, will have to lower dividends. And it's bad to see all this debt accumulating. One of the biggest things about Muddy Waters and other shorts that are coming in is these guys have a lot of money. We're not talking about a couple of retail traders. We're talking about big money with fat bank accounts and pockets shorting one of the biggest mortgage trusts in the entire world. And the amount of capital they're bringing in for this game is immense. And the domino effect has already started, guys. Mortgage investor JER files for bankruptcy. It's the latest property firm to crash in the US. And like I said, they also specialize in a lot of commercial real estate. And guess who else is specialized in a lot of commercial real estate? Small regional banks. Small regional banks are going to be the main funding and the powerhouses to build a lot of these commercial real estate properties, because big banks, they don't really want to do that. And plus, big banks have other insane and very lucrative revenues to go for. So big banks don't necessarily have to take on these very scary commercial office loans, whereas small regional banks do not have the market or connections like big banks do. So usually small regional banks are the ones who say, okay, we understand the risk commercial real estate, but we still want to make money. Let's loan out some loans to these commercial office builders. And look at this, they're still selling plots of land. In fact, according to FDIC, there's $3 trillion worth of commercial real estate property loans across all regions of the US, and it affects about 300 to 500 banks, up to 1,000 small regional banks in the US, all hold some type of commercial real estate, and not just holding them, but holding it at like very enormous amounts of numbers. This is why a lot of big hedge funds and corporations are refusing to buy small regional banks, because of the possibility of a second big implosion. I mean, wow, you thought SVB was bad. Well, just wait for the commercial office sector to blow up, because 2024 this year, according to Blackstone Mortgage Trust and other guys out there, it's going to be a pretty difficult year for commercial real estate. And also, Muddy Waters is saying that this year, quarter two, we should be seeing a dividend cut, which will probably cause a massive outflow of capital for Blackstone Mortgage Trust, and shorts will win. Now, before you guys leave, definitely check out the private Discord server, guys. We have a lot of really amazing traders on here. You know, some of our gains are actually pretty nice. So trade with us, and it's a 7-day free trial. It's $20 a month. It's super cheap. Check us out. I mean, some of our trades are pretty profitable. And recently, you know, just yesterday, we have a very red day, you know, on January the 2nd, and we already got some pretty juicy scalps from these traders. See you later.